A macroeconomic issue in Argentina is inflation. The current inflation rate is 25.4%. From the turn of the century to World War II, Argentina had one of the better economies in the world, with very stable prices for the better part of 50 years, with the only noticeable internal fluctuations being attributed to the Great Depression in the two world wars. However, in 1945, when World War II ended, so did this period of stability. The government's increased involvement in the economy after 1945 was a major driving force for inflation, with heavy tariffs on imported goods, rising wages, and inefficient production becoming major issues. From 1945 to 1990, Argentina suffered from chronic inflation, which continued to grow. Of the government's involvement in the economy, the most damaging was that of monetary expansion. Argentina's government decided to expand the money supply in an attempt to foster growth in the economy, but it was simply a political move as it fueled inflation and devalued the higher quantities of currency in the country. Argentina's growing inflation reached hyperinflation levels in the 1980s, when inflation peaked at over 20,000% in 1989. These incredible rates of inflation led to a food shortage, with the population in general panic. Riots and looting of supermarkets broke out across the country, causing the government to declare a state of emergency. In this period, Argentine currency experienced a devaluation of 1,000% in a matter of months. One of the most prevalent drivers of this inflation was inflationary expectations. No matter how hard the government tried to combat inflation, the people of Argentina had already lost all confidence in the Argentine peso and the economy. The most wealthy stored their money in American banks and invested in American stocks. Less wealthy often carried $100 bills, since they knew it would keep its value. Indexation was also used in contracts and payments. This meant that wages and payments had price hikes included to account for inflation, but problematically, such practices contributed to inflation as well. Eventually, hyperinflation was finally reined in by aggressive anti-inflation policies adopted by President Carlos Menem and his economic ministers Domingo Cavallo. Menem and Cavallo put in place a currency board, which means that the monetary authority, central bank, must keep a fixed exchange rate with a foreign currency. In Argentina's case, this meant linking the Argentine peso to the US dollar. This theoretically means that the peso will experience inflation at the same rate as the United States dollar, which was one of the most stable currencies available. This also means that the central bank cannot expand the money supply unless they get more money through a trade surplus. As expansion of the money supply was a major issue prior to the currency board, this was an important exchange. The central bank was also committed to a one-for-one exchange, in which anyone could bring one Argentine peso and exchange it for one US dollar. The major problems with a currency board is that it makes it impossible for monetary policy to effectively respond to economic crises such as recessions. While the hyperinflation of the late 1980s was gone, inflation in Argentina was still relatively high, and would continue to be to the present day. In the mid-1990s, Argentina saw almost no inflation because the peso was pegged to the US dollar. This meant that Argentina saw the same price level changes as the US. Eventually, though, this peg collapsed and the forced conversion of dollar contracts into peso contracts at a non-market exchange rate, and so the Argentinian economy began, once again, to experience high levels of inflation. In 2016, Argentina saw yearly inflation to be over 40%. This was one of the worst recent years, and it can be attributed to the removal of distortionary price subsidies that were previously used to hide inflation. Today, Argentina is still struggling with high inflation. In 2017, the central bank had planned to reduce inflation to 17%, but it missed its goals and prices rose by nearly 25% in the year. This inflation is unhealthy and inconsistent with neighboring countries. Countries like Brazil, one of Argentina's neighbors, saw inflation of just 3% in 2017. Analysts contribute Argentina's inflation partially to rising utility prices. While prices in Argentina rose by 25% in 2017, utility prices rose by a whopping 40%. In order to reduce inflation, the central bank has considered delaying utility price hikes, but many have deemed this an unhealthy practice. The economic mood in Argentina is very grim. Even the government has to pay a 25% interest rate to borrow in pesos for short periods of time. Lenders are unwilling to provide long-term credit at a fixed rate, knowing a hike in the price at any time would destroy the value of their loans. Households and businesses are also unwilling to finance with variable interest loans or short-term loans because they know that a spike in inflation could cause their interest payments to become unmanageable. Argentina's history of high and variable inflation has destroyed the domestic mortgage market, making it impossible for a household to use a mortgage to buy a home. Businesses are also reluctant to borrow because they recall how previous increases in inflation, and thus in interest rates, pushed otherwise healthy companies into bankruptcy. The life insurance industry has been destroyed by high and uncertain inflation as well. Indexing price levels, a typical response to inflationary habits of an economy, does not work in Argentina. This is because the inflation is so unexpected and of such high magnitude that indexation cannot be achieved. Higher inflation has also been crippling the economy by encouraging wealthy people to invest money elsewhere. Many have taken their money out of Argentina and moved it to investments in the United States. Low investment in Argentina holds down productivity and growth, and thereby contracting real GDP. The crisis of the Argentinian economy is complex, but also holds many lessons that other countries and economists should pay attention to. In order to counteract inflation, Argentina should increase its aggregate supply of goods and services. This will increase real GDP while simultaneously reducing price levels. A way to accomplish this is to decrease corporate taxes and loosen business regulations. This reduces the cost of producing goods at every price level. Another way to decrease the price level is to decrease aggregate demand of goods and services. This decreases real GDP. Increasing income taxes to reduce consumption, decreasing government spending, and setting trade tariffs to reduce net exports could accomplish this. Argentina's central bank should increase interest rates to slow inflation. The federal fund rate is the rate at which banks borrow from the government. Banks must increase their interest rates if the central bank increases its rate in order to make a profit. Higher interest rates increases the cost for borrowing funds, so businesses will borrow less funds to make investments and consumers will borrow less for purchases. This is a powerful way to reduce spending and aggregate demand. We also recommend Argentina to enact policies that encourage reduction of the money supply. They should increase interest rates on government-issued bonds so more investors will purchase them. This will raise the exchange rate of the Argentina peso due to higher demand. Imports will rise and exports will fall, so net exports will decrease. This will decrease the amount of money in circulation, since it will be going directly to the government from private corporations and citizens. Another way to reduce circulation is by calling in debts owed to the government. Argentina should also increase reserve requirements for banks. This will reduce the amount of money banks will lend to consumers. If consumers borrow less, their spending decreases, and aggregate demand decreases. Thank you for listening, and hopefully this video made you more informed about the state of Argentina's inflation and possible ways to counteract it.